Good morning, everybody. Happy Thursday. It's June 1st, 2023. Great to be with all of you today. That was Tony making a little cameo appearance. Great to be with you, all of you today. My name is Bob Lang, and I run explosiveoptions.net. So it's time for our daily bites. Of course, we missed the daily bites on Monday. It was the holiday, May 29th. Hope all of you had a wonderful Memorial Day holiday. But we're getting back to it today. So let's take a look at the markets here and see if we can figure things out. So as you can see that the futures are off a little bit this morning from what they were earlier. We had a pretty hot ADP number. I'll show you that in just a moment. And actually more, we had a bit of an increase in jobless claims as well. All signs point to the Fed likely going to raise interest rates at the next meeting. And I know there's been a lot of speculation that they're going to pause, but I don't see that happening here, especially with the hot data that we had. And we got tomorrow's non-farm payroll coming in. Today's ADP report, of course, came in at 278. Consensus was for 160,000. So it looks like job openings and layoffs came in quite high yesterday. The JOLTS report came in at over 10 million job openings. So it appears to me that the job market remains strong, and it's going to be driving the economy as well too, as it has for the past couple of quarters. So if wages are hot and we have inflation numbers coming in 2 weeks, CPI comes in, I believe, on June 13th, and the PPI number on the 14th. Of course, that's the 2-day meeting for the Fed. If those numbers come in hot, we could certainly see another rate hike coming in June, and more likely another one in July. So keep an eye on that. So as it relates to markets over here, let's take a look at the S&P 500 chart for a moment. Of course, yesterday was the end of the month, end of May, and what we like to talk about with the end of the month is the monthly chart and the MACD, right? And we like to see where is the market positioned for us in the longer term. Are we in a bull market or are we in a bear market? And this has pretty much been for years my one indicator that tells us whether we are in one of those two conditions. When we have the black line over here above the red line, it means we're in a bull condition. When we have the black line below, we're in a bear market. So we've been in a bear market since about the beginning of 2022. We're making a run to try and cross over that. Now, as I view it, it's not just the crossover that matters. It's the next month that matters the most. So if we cross over and we get a confirmation that this crossover is done, then yes, I can certainly make an argument for saying that we are in a bullish condition right now. But as of right now, we see that the black line is at 67. The red line is at 92. So we haven't crossed over yet. So even though markets are up in 2023, we are still in a bear market. So what we would call this since October is another bear market rally. Okay, until we get that condition changed and we get a confirmation of that condition, in my view, things haven't changed, right? Has the market gone up? Sure. Has the NASDAQ gone up a lot? Absolutely. In fact, I think we are out of the bear market condition for the NASDAQ. Let's take a look at that over here. DX. We are just crossing over that line here today. So we haven't even crossed it this month. So if we get crossover at the end of June and then a confirmation at the end of July, then I'm willing to say the NASDAQ, for its part, will be out of a bear market going into the fall, August or September. So you've got to understand what these conditions are all about. Wait for them to happen before you step in. And again, another bear market rally still until we see that crossover and then a confirmation the next day. So as it relates to breadth has been a little shaky here lately. Look at new highs versus new lows here. You can see we had a sharp drop in new highs from a couple of days ago, and big move down and new lows. We've talked about breadth quite a bit, and stocks above 50-day moving average for the S&P 500, 50 SPX. Let's take a look at that here. And look, 26% of stocks in the S&P 500 are above their 50-day moving average, which tells you 73% of them are below their 50-day moving average. Basically, 73% of stocks in the S&P 500 are in their own bear market right now. So, again, you get one picture, one story from the monthly chart, the conditions as they are, as such. You get another story from the breadth, and which is the daily breadth, which tells you what's going on. It's the oil that makes the engine run. Okay, so I think that the conditions are not great right now for the markets, but certainly that can be turned around. And given the fact that the markets have been rather strong in the S&P 500 and the NASDAQ, not so much in the Dow Industrials and the Russell 2000, which are basically flat or slightly down for the year. The conditions as such, we have a separation of markets here. I'm still going to stand by my view that the S&P 500 is still in a box of about 4,200 to downside 3,800, but we could actually upgrade that to possibly 4050. Let's take a look at that chart here right now, and you can see what I'm talking about here. I'm going to say that we're still locked in a box here. 4,200 to the high side, and again 4050 here. It's going to go a little bit larger than that, down to 3,800. Okay, so I'm down over here. So we're kind of it was one of those TVs, picture in picture, right? We have a little box inside the bigger box over here. So I'd say that given the fact that if we don't break this 4050 level, if we can even come back and test it, that could be something to watch and to take our, if we really are looking for where the support levels are, this is probably it. So as far as ideas are concerned, I don't have a whole lot for you right here today, but right now, again, going into next week, we do have don't have a lot on the schedule for next week, but we do have some good economic data to be taken care of. Today, we do have earnings coming out from Lululemon. I do like Lulu, actually, after it's come back down and tested the 100-day moving average yesterday. See it right there. Here's the 100-day moving average right here. It looks miserable, right? Of course, but they had really strong earnings last time around, and they've corrected a lot of that fluff that came from those earnings. We had Macy's came out with really poor earnings and outlook this morning. Tonight we'll have Broadcom, which has been a hot number the last couple of days. I have nothing that I'm not involved in that one. Zscaler is another one, ZS, and then MongoDB is always a wild mover on earnings, and there's just not a lot of stock outstanding here. Chart's looking pretty good, but what we've noticed is that a stock that's really moved up in front of earnings, it ends up getting priced in, because look at CrowdStrike this morning. Came out with really good earnings and strong guidance, and the stock getting pounded, just losing a lot of the stock move that it's had for the past couple of weeks. And then finally, ChargePoint's coming out a little bit later on today, which is the stock that we have in the Action Alert Plus portfolio for real money, for real money and thestreet.com. So we'll be looking at that one. That one actually had a really nice move earlier in the week and followed through yesterday. So if it gets above that 100-day moving average, call it about 1010 or 1012, it could make a run up to that 200-day moving average, about 1175. So I think that's going to be it, everyone. And have a wonderful weekend. And of course, we'll be back on Monday, June 5th, to chat again with you about markets. Looks like we might have a deal on the debt ceiling, which is great. The European inflation numbers were a little bit less than expected, which is good news. And enjoy basketball tonight. Starts the NBA Finals start tonight. Denver Nuggets versus the Miami Heat should be a great series. And wish you guys all a great weekend and enjoy yourself. Be careful. Keep your protection on. Still a bear market. Keep some puts working when you can. Talk to you later, guys. Bye.